Okay, good.
And we do have a quorum. Not yet. Meeting's not been called yet.
Good evening and welcome to the Common Council meeting for July 30th, 2013. Clerk will call the roll, please.
Fernsler.
Here.
Hanson.
Present.
Sedlacek. Williams.
Here.
Anderson.
Present.
Markham.
Here.
Jarvis. Nelson.
Here.
Let the record show that we have a quorum for a Common Council meeting. Please stand for the Pledge of Allegiance. I
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Next item on the agenda is the approve the list of items for consideration on the consent agenda. Chair will entertain a motion.
So moved, Alder Anderson.
Second. Alder Markham.
We have a first and a second to approve the list of items for consideration on the consent agenda. Any discussion? Clerk will call the roll.
Nelson.
Yes.
Anderson.
Yes.
Markham.
Yes.
Fernsler.
Yes.
Hanson.
Yes.
Williams.
Yes.
Motion carried, thank you. Item 4 is the audience portion where we recognize people who signed in and they get to do the talking and we get to do the listening. And
Bill would like to,
Oh.
I said none, but then Bill would like to add.
how
his
did you
name.
sneak up there without me seeing you?
Fiber optic.
You're quick. Tonight we have Bill Emmig who signed up. Bill?
The reason I need to make an announcement is that on August 21st, we don't have anybody to do the concessions for the band concerts. So if there's a group out there that is interested, or if the council wants to jump in and do it, it is available. And if you're interested, call the clerk's office and we'll tell you what needs to be done. So basically, that's it. Thank you.
Thank you, Bart. Bill. We're on a roll. Okay, moving on. Item 5, discussion and possible action on the refunding of the $3,870,000 taxable combined utility revenue bonds, Series 2010. And tonight we have with us Phil Cawson to give us a little bit of background on that. And welcome, Phil, and what do you have for us?
Thank you, Mayor. Good evening, everyone. Well, this is I'm coming back about a month late, and I'm not coming back with sale results. I'm coming back with a couple more options to consider. We'll start there. Back in May, I came and we talked about refinancing the 2010 combined utility revenue bond, Build America bond. And if you recall from our discussion back in May, what had occurred is as part of the sequester budget, we saw a reduction in the rebate payments. And so when you issued the 2010 Build America bond, 35% of the interest payments on an annual basis, twice annually, would be rebated back by the IRS. And as a result of the sequester, that rebate was reduced. And what I shared with you also that evening is that as part of that debt issue, as a protection to the city and to the utility, we put in place what's called extraordinary call feature, which allowed you to refinance that debt at any time without penalty if two things happened. One, they reduced the payment, or two, they didn't make a payment. Now that that's occurred, we brought to you back again in May the opportunity to refinance that debt issue. So at that time, I indicated that we were pretty confident this was going to move forward. Interest rates were low. There's always a chance they're going to go up, all that kind of good stuff. And of course, this time, it kind of bit us. The plan was to sell this at the end of June, if you recall, at your meeting at the end of June. And about 2 weeks prior to that, we saw a significant spike in interest rates. And at that time, we had to kind of look back and make a determination as to whether or not we wanted to move forward. So I contacted Administrator Yurgis, and we talked about different options. The first option, I think, was just, let's pull this, let everything settle down. We had the 4th of July weekend coming up. It just made sense to kind of pull back and to kind of rethink where we're going to go with this. We talked about coming back to you at your first meeting in July, and we still had not seen much in the way of different bond issues being sold in the marketplace, so we didn't have a good feel for what was happening in the market. That's changed, and we are seeing a lot of sales being done again, but again at these higher rates. We thought there was the possibility we're going to see kind of a spike and then kind of have it kind of trend back down. That has not occurred. We have continued to see rates at higher levels, and we kind of suspect now that this might be our new norm at this point. So last week, or I think it was early last week, I was in the area and I stopped in, and we had a chance, Brian and I had a chance to talk. We talked about bringing this back to you and really provide you with 3 different options. The first option is to do nothing. You keep the debt issue in place. As it stands right now, there'll be a reduced rebate payment going forward, but that could change. There's that opportunity that may change. So they could stay in place and nothing has to happen with the debt issue. Everything's fine, it's in place, and you don't have to deal with it. The second option is to look at, and I've handed out this document just prior to, the second option is to look to do the refinancing as a revenue bond. So the first 2 pages in are looking at refinancing this debt issue as we had proposed before as a revenue bond. Again, a combined utility revenue bond issue like all the other debt issues that are undertaken by the utility. And so we restructured it a little bit. We resized it based on the fact that we're a month later now. And so the amount that would be issued is $3,175,000. And if you go to the second page, page 2, we've identified what the new estimated rates would be. Now, one thing we're not seeing a great deal of yet since the end of June, we have not seen a great deal of revenue bonds being sold. We've seen a lot of general obligation issues. So we still had to put together our best estimate at this point. You'll see on the far right-hand side, well, 2 things. One, we still, as we showed you last time, used the full 35% rebate to make the comparison of what savings would be there if you refinanced it. And then 2, after our discussion early last week, we decided to shorten up the debt issue by 3 years. In the past, we had some small maturities, the last principal payments, the last 3 years of this. It was our opinion that maybe this would be a little more attractive if we shortened it up 3 years and reduced those $75,000 payments and brought those up into the earlier years. So those are the 2 changes that were made. We've increased the rates to reflect what we think is the marketplace now. And you'll see in the far right-hand column is the total savings. As a comparison, what I had provided you back in May was an estimate of $832,000. That's dropped to about estimated $645,000. And of that $645,000, a significant amount of that is really the reduction in what's called the debt service reserve fund that is required to be funded. You've paid off some of the debt, you can drop the debt service reserve, and we're using some of that to reduce the amount of debt that's outstanding. So there is a net savings, a future savings of $163,000 under this option. Again, assuming you're going to receive the full 35% payment. If it's a reduced amount, that savings column would be a greater amount. But we've always taken the approach that we show the full amount of the rebate. So going back to what we had talked about, remember back in May we asked you to approve what's called a parameters resolution. And that at that point there are certain parameters that had to be met to go ahead with the refinancing, and that's where we ran into issues. One of the parameters was that you wanted to see a present value savings of at least 1%. And we did not hit that. We could not hit that with that increase in interest rates. So our recommendation would be to eliminate the parameters resolution. We would move forward with a kind of a standard sale process. You would authorize, we'd be back in front of you next month with rates. So that's option two. Option one is do nothing, leave it alone. Option two is the refinancing, as I've shown you, which again is reduced from what I had provided to you back in the end of May by about $200,000. And then the option three that I brought to Administrator Yurgis when we met earlier was to look at issuing this as a general obligation debt. We've done that once before, where we've refinanced a utility revenue bond for savings as a general obligation. And the reason you would do that is to really maximize the savings. The actual interest rate you'll receive on a general obligation issue will be lower than you'll receive on a revenue bond. And so we looked at this as an option. The downside of this, and again, we had a chance to talk through this, is that you're using up some of the city's borrowing capacity. Again, as we talked through that, I think there was a consensus that this is an option because you don't have any looming large-scale projects out there that are going to be a drain on that borrowing capacity, at least for the next number of years. So that wasn't as much of a concern because you'll have plenty of capacity left. So this option, what we're able to do is two things. One, the interest rate that we're showing here is a little bit better. And two, we're able to use the full amount of the debt service reserve that is attributed to this issue. And as a result of that, what we're issuing, instead of the earlier $3,175,000, we're issuing in this case $2,850,000. Now what you're doing again is you're using cash at the utility, and you're going to be hearing about the utility audit in a little bit, that's designated for these debt issues to reduce the amount of the outstanding debt and the debt that you would be issuing. So that's the way what you're doing here by turning it over to a GO issue. The amount here would be $2,850,000. The last page in, you'll see the savings bumps up significantly. It's a little over $1 million. Again, a significant portion of that, $791,000, is the difference between the old debt service reserve fund and the new debt service reserve fund once this is not identified as a revenue debt issue. It'd be a general obligation issue, still paid by the utilities, but a general obligation issue. And the net future savings jumps to $263,000 from $163,000. So as I indicated last time, there are some communities out there that have taken the position if this is a break even, we see it as a win because we kind of get out from underneath a long-term relationship, if you will, with the IRS, where they're going to be making a rebate payment twice a year, and you're counting on that rebate payment coming in twice a year. This eliminates that. You don't have that. You're not waiting for that payment to come in twice a year as you make your interest payments. You're not under the threat of any further reductions in the future. So that's one benefit. The second is there is a net savings to the utility by doing this as far as their annual payments and their annual obligations. So when it comes to budget time, they'll be able to budget a little bit less for debt payments. In return, though, their debt service reserve fund that is out there have been reduced as well, and the interest they can earn on that will have been reduced. So I think those are the three options that we came up with. One, again, do nothing, leave it as is. Maybe under the theory that maybe rates will drop. Should we hold off until further to see if they're going to drop? Two, doing it as a revenue issue like we had provided in the past. And then third, as a general obligation issue, removing it from a revenue bond issue to a general obligation bond issue.
I have one, go ahead, Clerk Huberty.
Question, thank you, Mayor. This 8.7% reduction that we saw this past payment, is that just like for this year? And they'll revisit it every year going forward? Or it's permanent,
Yeah, well,
or don't you know?
we don't know.
Okay.
Yeah, there's really.
It could
nothing-
go higher. It could go away, or it could.
It could go back to
anyway.
the regular 35%. Certainly, that's an option. It could remain, and as long as the sequester budget is out there, we just really don't know. There's not a lot of guidance or direction that we get.
But the analysis includes the full 35% rebate.
It does.
So the rebate would be greater.
The savings would be greater.
Yeah, well,
The two
and
years,
the savings, yeah.
Right.
Alderman Hanson?
Quick follow-up question on Clerk Huberty's. Could this go down to, could the government say, we're not giving anything back? You got your loan, and we're not gonna give, I mean, it could go that direction, correct? I mean, not that it will, but we didn't know about the sequester either, so.
That's always a possibility. I would doubt
Do you-
that. Really would doubt that, but.
Do you recall what our debt margin on the jail was?
I believe if I recall, after this, you would still have about 9 million of remaining capacity, if I recall correctly. That was a couple of weeks ago, but I think that was the number, in that ballpark.
Yeah, it's important that we have.
You have plenty of capacity. And again, you're
and
paying off,
We're
you're
sufficient
paying
there.
off, if I recall, it was 500 to 750 a year in principal. So, I mean, you're adding to that number each year as you pay off debt as well.
Yeah. Question I have, Phil, would be, if we do nothing and pass at this time, do we still have this option in our call issue that we're discussing right now a year from now? I mean, we
Yeah,
can look
that's-
at it every year, or,
We've had that discussion with bond counsel, because again, they have to provide an opinion that this is allowed. They prepared the legal document, they reviewed our official statement when we did the original BAB issue in 2010, and allowed for that call feature to be in there. It's their opinion now that because they didn't, make the full rebate payment, that we have this option. If, just say, a couple months from now, and they make the full interest payment, there is a question, I guess, as to whether or not you would have this option, if they've made the full rebate. If they miss it once, I don't know, I guess somebody could question, okay, they missed it one time, and now they've made the full 35% payment, what does that mean going forward? Do you have that ability still to prepay these bonds? That's kind of a gray area that we haven't had to test yet.
but
So I
if,
don't have the answer for you. I think still the door is open because they did miss a payment, but we'd have to get, again, an opinion from Quarles and Brady on that.
so if we assume we do nothing, and 2 years from now, they miss another payment, then that provision is still there,
Yes. Oh,
even
yeah.
though we
That
haven't.
provision's there for
it-
the
we-
life of
We
the
never
issue.
lose that,
Correct.
okay,
That's
that provision
correct.
payment if in a future year.
That's correct.
Okay. And anything less than the full 35%,
The call feature kicks in.
correct,
Yeah.
and the 35 is our best number,
Correct. Yeah,
Correct.
That's the maximum amount.
okay. Any other questions for Phil?
So you'll see what we kind of crafted the language as discussion and possible motion. So if you want us to proceed with option 2 or 3, we would come back to you, again, we would proceed under that. As we did in the past, if we got to a week before or so and we saw rates continue to rise, we'd pull it again, like we did last time. We were all the way down to, the official statement was done. We had a rating call already completed. I mean, everything was kind of wrapped up, and we kind of pulled back and said, okay, we're going to reset and start over here. That doesn't change. That's the process we would go through again. And there's certainly that chance.
I guess I would ask staff as far as where we're sitting now on on the top of this fence, do you have any gut feeling for direction?
You want to comment, or?
Go ahead.
I guess what I would comment, if it was me, I would just go on the geo basis, and the reason for that is because of the greater savings. But if you look at it, it's essentially 12 years that the debt will be paid off. You're not talking about a lengthy amount of time. I do believe you are correct that it's about $9 million. I don't know the raw percentage, but with the principal we're paying down and looking at the 10-year capital improvement plan, I just don't see us borrowing a significant amount of money on a geo basis for any general fund project. So I look at that and a relatively short issue set, or short time period where we have to pay it back, and I don't see the harm in doing the geo. Now, if for some reason, there were 5 years from now, just to realize what the risk is, 5 years from now, levy limits are still in place, shared revenues are cut, and that would impact our budget, which means we would have less funds available for capital projects, which if we wanted to do capital projects, we would then be back at the table to do general obligation debt for general fund projects. So just realize that there is that risk that we could have something, but given the fact we're not talking 20 years and the dollar amounts, I just don't see us having the need to borrow millions of dollars on a general obligation basis. So that would be my recommendation, but obviously that, there is consideration to do it on a revenue basis, because then you wouldn't have to contend with that issue if there were future revenue issues and we didn't have funds for capital projects.
I have a question for Phil. Assuming that we give the go-ahead to do a general obligation, then you would go through the same steps as you did before and bring it back, and we'd still have the same 10 o'clock morning pullback if in case that
Yep,
happened
same
to
process. We,
come
if
out.
it- general obligation, we'd be preparing a new official statement, because the last one was revenue-based. We can use some of the same information. And then we'll have to go through another rating call, hopefully shorter rating call at this point. But yeah, same process, and again, we'll keep an eye on what's happening and pull it if need be.
Okay, good. Alderman Hanson.
I move that we go with the general obligation bond, and we cancel the other part that we have. I forget what that's called.
Parameters resolution.
I'll second that.
We have a first and a second to give Ehlers the go-ahead for a GO debt refinancing. Is that the proper way to say that? Discussion?
There would be a different resolution, and that would be adopted at,
At the sale night.
okay, the
Final
sale.
sale, yeah.
Okay.
Yeah, I guess this would be the indication.
This is authorizing us
That
to
you want
proceed.
to
Yep.
start the process
Right.
again. Discussion?
Mr. Mayor, I agree with Brian. I think the savings are hard to ignore, and I think it would be a good idea, and the shorter term is good, and we don't have any, big capital projects we're gonna need to borrow against. I think it's a good idea.
Any other comments? Clerk will call the roll.
Hanson,
Yes.
Jarvis.
Yes.
Markham,
Yes.
Williams,
Yes.
Nelson,
Yes.
Fernsler, Anderson.
Yes.
Motion carried, thank you.
Thank you. Hope
Thank
to
you,
see you in
Phil.
August.
And let's hope to see you in August,
Yes.
that's right.
Never know.
Okay.
Thank you. Moving on, item 6, presentation and acceptance of the 2012 audit report of Plymouth Utilities by Baker Tilly Virgil Kraus LLP. I'll call on Administrator Jurgis to start the discussion and introductions.
We have Jamin Friedel.
Yes.
From Baker Tilly. He is a manager on the audit team for Baker Tilly. In the past, you've seen Aaron Worthman, who's a partner. He is not here tonight, but he still is involved with the Plymouth Utilities audit. But Jamin is perfectly capable to lead the presentation tonight, and we're glad you could make the trip from Madison. He does have a handout that is a good summary of the audit. Tonight, the purpose would be to review the audit from a high level and basically accept the audit report or the scope of services or engagement that Baker Tilly completed for us. I know that there were some questions about maybe having additional meetings related to more detailed or specific questions. Some of those questions could be asked tonight. Otherwise, certainly we could coordinate another meeting at another committee meeting or council meeting to discuss those issues. Or if there are questions that staff may be able to answer, we can certainly prepare that detail or analysis as well. So with that, the floor is yours.
Okay, thanks, Brian. He's assuming I'm capable. Guess we'll find out. Anyway, as Brian mentioned, my name is Jamin Friedel. I'm a manager with Baker Tilly Birchall Krause out of the Madison office. I've been with the firm for about 8 years now. I've been working directly with utilities for roughly 4 or 5 years now. And this is the 2012 financial audit presentation. Before I get started, I just want to quickly apologize. I've been battling kind of a nasty cold for the last 3-4 days, so I'm a little raspy. And that explains the gallon of water I brought up with me. So if I get a little choked up, I might sneak some water. So I do apologize for that. This is my first year giving the presentation. As Brian mentioned, Aaron Worthman, the partner on the engagement, has historically given this. So you might see some changes in the format, but hopefully I cover everything to your satisfaction tonight. I know you guys have a pretty jam-packed agenda tonight and want to move on to other things, so I'll try to get through this as quickly as possible and really just kind of give you guys enough time to ask any questions, because that's the most important part. Moving on to the actual presentation itself, I have it split up into three pieces, basically real quick audit overview and a summary. Moving on to the management letter, recommendations, internal control points, which we can decide if we want to go through those. I'll discuss that later. And then we'll go through the financial statement highlights that I have there that I just handed out to you guys. As far as the audit overview itself, very similar to prior years. We came out mid to late February, conducted field work, our actual nuts and bolts of the audit testing. Following that, we go through the process of first ensuring that the PSC report gets filed by early April, and then we move on to finalizing the audit report that you folks have in front of you tonight. As in past years, Howard and the rest of his staff were very helpful, very engaging, very well prepared. It's a significant amount of work to pull together and close the books for the utilities, especially following the holidays and still trying to keep up with current year transactions. So I do appreciate all the hard work that they put in for us and make our job a lot easier. The audit itself, of course, was performed in accordance with generally accepted accounting principles, or GAAP. So you may hear me refer to that a couple times during the presentation tonight. It's really just the standard setting guidelines, FASB, GASB, things like that. So you may hear me reference GAAP a few times tonight. The overall audit objective is to provide reasonable assurance that the financial statements and financial records are free from material misstatement. Key word in that sentence is reasonable as opposed to absolute. There are just inherent limitations with a financial audit. We can't come in and look at every single transaction during the year. So we rely very heavily on sampling and test of controls, materiality, terms like that to get a very solid sample of transactions that we can look at, but we can never look at every single transaction. So we can give you reasonable assurance that the financial statements you have in front of you tonight are free from material misstatement. The audit report itself did receive what's called an unqualified opinion from Baker Tilly, which basically means that the financial statements and the financial records are appropriately presented and free from material misstatement, and that is the highest level of opinion that you can obtain on an audit report. So very standard to prior years. From an accounting standard point of view this year, any new implementations, anything like that, we did implement a couple new accounting standards this year. Nothing earth-shattering, nothing that affected the way we account for transactions, the way that Howard and his staff account for transactions. Really just kind of changed some titles within the actual balance sheet, income statement, cash flows, things like that. Really nothing earth-shattering at all from an accounting standpoint. Not that accounting standards are ever all that exciting anyway, but it was very much not an exciting year this year. Utilities itself had a very busy year, obviously with the operations building up and running, new electric rates in place, but from an accounting standpoint, really not much going on this year. So that's really just a brief audit overview. Any questions on the audit itself and how things went this year? No? Okay. The second piece of the presentation is the actual management letter, which I believe you folks have in front of you. It'd be the smaller document without the cover page on it. When I first started here 8 years ago, I think this report was about 10 pages long. Now it's like 30, which really there's not much information in here that's different from the prior years. I'll go through the internal control points very quickly, and I'll go through the required communication. I'm going to breeze through it very quickly. If you guys have any questions, just go ahead and interrupt me, but it's almost identical to prior years, so we'll get through that as soon as possible. So I'll point you to the pages that I want to start with in this. Obviously, we're going to start with page 1, and this is where we discuss internal controls and any material weaknesses that the Plymouth Utilities may have. And within this page 1, this defines what a material weakness is. A material weakness is a deficiency or combination of deficiencies in internal control, such that there is a reasonable possibility that a material misstatement of the entity's financial statements will not be prevented or detected and corrected on a timely basis. In all honesty, 90% of my audit clients have material weaknesses similar to what the Plymouth Utilities have, just due to it being a governmental entity, budget constraints, staffing constraints, things like that. So the three segments that we identified material weaknesses in related to the Plymouth Utilities. The first one is internal control over financial reporting. The second one is the control environment as a whole. And then there were some specific internal controls that we'll talk about as well. If you turn over to page 2, the first one that we discuss is the internal control over financial reporting. Again, like I said, 90% of my clients within Wisconsin, the smaller municipal utilities, they do get this material weakness, again, just due to staffing constraints. In order to not get a material weakness, Howard and his staff would have to be able to basically draft the entire audit report as is without us finding any material changes and us coming in and not finding any material audit adjustments. Now, is it cheaper to hire 2 or 3 full-time people to do that, or is it cheaper to hire an auditor? It's always cheaper to hire an auditor to come in and do this and tell you have a material weakness. It's nobody's fault at the utilities. It's not due to their experience or their knowledge. It's just the fact that they don't have the staff on hand to do that. So that's why they end up with this material weakness over financial reporting. Again, the control environment as a whole kind of wraps up into that material weakness as well. This just comes down to basically a segregation of duties issue, not always having enough people on hand to review journal entries, to review monthly financial statements, to review basically every single transaction that flows through the utilities. Again, just basically due to budget constraints. So the control environment as a whole, from the aspect of segregation of duties, the Plymouth Utilities have a material weakness there as well. And then the specific internal controls, which I won't go through in detail, they're listed out on page 3. These are similar to the prior years. When we come in and do the audit, we actually identify the key transaction cycles that we look at, where we see risk or material numbers flowing through the utilities' financial statements. So obviously, we're going to look at disbursements, we're going to look at payroll, we'll look at utility billing and receipting, and of course, work order, capital asset additions, and then overall journal entries and financial reporting as a whole. And page 3 basically kind of lists out some areas of improvement that we see where some of these material weaknesses and segregation of duties issues can be taken care of within the utilities once you're back up to full staffing potential there. I know there's going to be a little bit of turnover in 2013 at the utilities, so it'll take some time to get back up to speed on these things, but these are just some things to be cognizant of going forward as you're hiring people and cross-training and moving on to getting full staffing. Keep these in mind and see how you can implement these as well to just basically improve the segregation of duties within the Plymouth Utilities. So that's the internal control point within the actual management letter. If you could flip over to page 10, and this is the area that I will go through very quickly because this is our standard language. This is what we call our required communication to the audit committee, or in this case, the city council. I'll go through some of these as quickly as I can. Again, if you have any questions, just go ahead and interrupt me. But this is information we're required to talk to you about. The first one being our responsibility under auditing standards generally accepted in the United States of America, which again, as I mentioned earlier, is our objective is to provide reasonable assurance that your financial statements are free from material misstatement, which was the case in 2012. The next point, other information and documents containing audited financial statements. This summarized basically says that we're only opining on the audit report in front of you guys. So as you go out for new debt issuances, any sort of financial reporting information you have within your official statement, other than the audit report information, anything you post on your website, any interim financial statements, we're not opining on those statements, we're only opining on the actual audit report in front of you, okay? Plan, scope, and timing of the audit, again, this is just discussing the fact that we talk about the audit with you folks. So similar to what Aaron did last year is what I'm doing this year, and that's what that point is covering. Accounting policies, again, this year, we did implement one new accounting standard, it was GASB 63. Again, it's just kind of a reformat of the financial reporting. So when we started, it was a balance sheet, then it moved to statement of net assets, and now it's called a statement of net position, and nothing changed. We're showing everything the same, just GASB saw fit to change the titles again. So 5 years from now, we'll probably see it again. They'll come up with something else. So they need to keep their jobs, I guess. Accounting estimates, we're required to disclose any material accounting estimates. As usual, depreciation, which we don't list in here, but depreciation on your plant estimates is a very significant estimate. Pretty much governed by the PSC. They give you a range of rates to follow. So we don't see much risk there. The only other material estimate within the utilities financial statements relates to the accrual of your compensated absences. Other than that, there's no real material estimates that we're relying on for the financial statements. And of course, the financial statements disclosures in the financial statements are neutral, consistent, and clear. We're required to report any difficulties encountered in performing the audit. As in past years, none were encountered this year. We're required to give you the corrected and uncorrected misstatements, what we call adjusting journal entries. At the end of this letter, we do have our actual audit adjusting journal entries, which we consider to be material, which is over that dollar threshold where we say we have to book these, we have to get these into the financial statements. Those are attached to this letter. And then what we have is entries called past adjusting journal entries, which we consider to be trivial, but over a set dollar amount that we feel we should communicate these to you. And what the past adjusting journal entry we had this year, similar to prior years, has to do with your accrual of your other post-employment benefits amount that is owed. So that will just keep building until we finally get to a point where we have to consider that material and record that entry. So that past adjusting journal entry is similar to last year as well. I'm not going to go through the journal entries. As you guys are going through them, if you have any questions on them, certainly feel free to reach out to me, shoot me an email, give me a phone call. Otherwise, Howard knows all the information behind them as well. He can answer your questions on the adjusting journal entries. But really, no surprises this year whatsoever. Very similar to prior years. We're happy to report there were no disagreements with management. Moving on to page 12, consultations with other independent accountants. If Plymouth Utility were to go out and talk to another independent accounting firm and get advice on how to record a transaction or any other piece of information that would ultimately affect their audit report and the way it's presented, they're required to tell us that they went out and got that consultation. To our knowledge, that did not happen this year. Management representations, we have requested certain representations from management that are included in the management representation letter. Again, that letter is attached, very similar to prior years. But if you do have any questions, go ahead and feel free to reach out to me. Independence, we are not aware of any relationships between Baker Tilly and the Plymouth Utilities that in our professional judgment may reasonably be thought to bear on our independence. We do provide other services aside from the actual audit itself, like preparing the financial statements, preparing adjusting journal entries, and of course they use Civic Systems Software, which is a subsidiary of Baker Tilly. But that does not impair our independence from an independent auditor standpoint. There were no other audit findings or issues, and this last other matters paragraph basically discusses the supplementary information, which is the very last few pages in the audit report. And this basically discusses the work that we do on those supplemental schedules, which we basically tie that back to audited work. We'll tie that information back to either the financial statements or our working papers, so the supplemental information at the back of the audit report is audited as well and is part of the opinion. So as far as required communication, that's all we have to report to you. I do want to point your attention to beginning on page 6 at the bottom. When you guys do have time, if you haven't had a chance to read through this basically goes through any new GASB accounting standards that are on the horizon for next year and the next couple years, as well as any developments within the PSC and state of Wisconsin as a whole. I would urge you to kind of read through this and just see if any questions come up out of this. Nothing earth-shattering. The GASB 5 next year will be a very easy implementation, and we can walk through this with utilities closer to year-end. GASB 68, I would take a look at. This will have a pretty significant impact on the utilities going forward, but that's still a couple years off in the distance, so we'll talk about that more as we get a little bit closer to that implementation of that standard. And then, of course, the PSC standards that are coming out. So when you guys have a chance, go ahead and read those. And if you have any questions or need clarification, go ahead and give me a call. So as far as the management letter and required communications, that's really all I had to go over. Any questions on that part of it? No? Okay. Again, very similar to prior years, nothing really changed from the past years. So now we can move on to that final handout that I gave you, and this is the financial statement highlights. So if you want to flip right away from the cover page over to page 1, the first 3 pages basically break out the utilities by consumption. Gives you a nice breakdown from 2008 through 2012 as far as what the consumption has done. Page 1 shows us the electric kilowatt hours sold this year. Again, residential, we continue to see a decreasing trend with conservation, with rising prices, economic conditions. We're probably going to see that continue for the next couple years. And then within small commercial and industrial, we're still seeing a pretty significant increase in kilowatt hour consumption. Again, with the expanding cheese industry, some more industry coming in. We expect to see that to continue for the next few years as well. But again, nothing out of the ordinary here. The graphs basically paint the trend where we're seeing residential go down a little bit, and we're seeing the industry rise. So no real major changes that we saw with the electric utility consumption. Moving on to page 2, this is where we discuss the water utility consumption. Again, historically, we've seen residential consumption dropping. 2012, we saw a little bit of an increase again due to the drought conditions. We expected to see this. We'll probably return back to normal conditions, especially with the mild summer we've been having in 2013. So we'll see that consumption probably drop a little bit back down for the residential. But again, commercial and industrial, we continue to see increases within the water consumption, again, due to the cheese industry growth with Great Lakes and Sargento. And I think based on Howard's rate study, we expect to see this to continue for the next couple of years. So again, no major surprises on the water utility side either. And the most exciting utility, sewer. Really, we expect this to follow along with water. It's basically the same trend that we're seeing with water, so no major surprises on the sewer utility side either as far as consumption this year. If you want to move on to page 4, we listed out the utilities debt coverage calculation for all the debt, not just revenue debt, but general obligation debt as well. As you can see, the requirement is 1.25 times the revenue debt service. But again, we included general obligation debt here as well. And in 2011, the coverage was 1.62, and 2012, we jumped up to 2.07. Again, the requirement is 1.25, so that's pretty significant room for debt coverage for a utility. They have a lot of room there. Just for your knowledge, only including revenue debt, which is the requirement, it was 1.64 in 2011 and 2.18 in 2012. So again, very, very strong debt coverage for the utilities. Moving on to electric rate of return. One thing I'll point you to right away, the 2012 authorized return for electric is actually 6.25% based on the new rate case in 2011, not the 6.5. But anyway, in 2011, we saw a rate of return in the electric utility of 4.2%. We saw that decrease a little bit this year to 4.18. I know most of you are probably thinking, well, we just implemented new rates January 1st. Why is our rate of return actually going down? Well, revenues did grow, consumption grew. Everything happened that we expected to happen from an operational standpoint, but your last rate case did not include the operations building and all the capital assets that are added to that net investment rate base. So going forward, probably in the next, maybe not 2013, but 2014, we're probably gonna have to go back and revisit the electric rates. Probably wouldn't need a significant rate increase, but we probably do want to get that operations building, all those costs. And there has been significant other construction in the electric utility side as well, that were not included in that 2011 rate case, and we want to get that infrastructure into the investment rate base. So probably in 2014, following the audit, we're probably going to want to go back and revisit this and think about looking at another electric rate case. So it's not that the utilities aren't running smoothly and efficiently and not doing their job. It's just that there's been kind of some unexpected construction that happened, especially with that operations building, that we need to get in that investment rate base. But for now, the utility's strong for the next couple of years, and we'll revisit that. Moving on to the water rate of return, which set the stage a little bit for Howard here. As you can see, this kind of paints its own picture. From 2008 on to 2012, we've consistently seen the water rate of return reduce from 4.58% to 2012, which is 1.57%. And the utility itself, at the current moment, is allowed a 6.75% rate of return. Again, in 2012, they were allocated almost $900,000 worth of capital infrastructure for the operations building alone. Some significant construction happened in 2011 with the Sargento relocate, the well 12 rehab, some water main improvements. So we've seen that net investment rate base continue to rise with almost reducing smaller consumption within the water utility. So you're seeing your rate base rise, and you're seeing your consumption of revenues almost drop a little bit, or almost stay stagnant. So it is time to obviously go back and revisit that water rate and see what needs to be done there. And then the sewer rate of return, again, nothing exciting here. Sewer utility actually had a fairly strong rate of return this year, even though they're allowed 6.75%, a 5.41% for rate of return for a sewer utility is fairly strong. So there's really no worries on that side of things. It's not quite as, the investment rate base isn't growing as quickly as the electric and water is. Page 8, we discussed a little bit about the unrestricted funds on hand. This is basically your unrestricted cash position and the amount of funds you have available to meet your day-to-day operations. Basically what we do is we take the utility's operating revenues and we divide it by 12, and that's your monthly operating revenues. The industry goal is to have roughly 2 months worth of operating revenues, worth of operating cash or unrestricted cash on hand. So the goal is 2 months, and in this case for the utilities in 2012, they have almost 4.5 months worth of unrestricted cash on hand in terms of monthly operating revenues. And this just basically tells you the ability of the utilities if there was a shutdown, major industry went down, any sort of emergency. We could almost guess that the utilities could continue to run from a cash flow standpoint for almost 4.5 months without any revenue coming in. So.
May I add to that comment?
Sure.
Is that, from a financial policy perspective on the general fund side, we have a policy that our goal is 25%. On the utility side, our policy says 30 to 50% range, given the fact that we may want to fund certain capital projects with cash. And so if you look at it from a percentage basis, it's roughly, call it 35% when you look at revenues compared to the reserves. So it's on the lower end of our policy, but it is above 25%, but that's the general fund standard. So just want to put it in a little bit different perspective, because we did have conversations in previous years about pegging a standard for the city on both the general fund and the utilities, and that's what our current policy says. So the other point is, moving forward, there will be some decrease in the reserves based on capital projects and so forth. So you will see that a slight decrease again in next year's audit.
Okay, and the final page of the financial statement highlights, this is the utility net position, which used to be your net assets. So the utility net position versus net plant. Basically, what this tells you is, obviously, utilities are very capital infrastructure intensive. It's the biggest expenditures that the utilities have. This table here shows you the percentage of capital assets that the utility owns versus what they still have outstanding debt on. Industry goal is roughly 50%, 50% owned by the utilities, 50% still owing debt on. And right now, the Plymouth Utilities is at 64%. So again, with a goal of 50%, the utilities are sitting at 64, which is very strong from an industry standpoint. So again, very healthy there as well. So overall, there's no concerns with the utilities. Obviously, the rate of returns concern you a little bit when you first look at them from a cash flow standpoint. I still think, fairly strong. Their net position is very strong. And again, debt coverage is very strong. But it is time to look at water rates, obviously, and then in the next couple of years, take another look at the electric rates. But overall, again, another successful year for the utilities, and we just want to thank Howard again and his staff and the council again for all your hard work, and appreciate it. So,
Good.
if you guys have any questions, I'd be happy to take them.
I would only add to that if we have follow-up questions that you don't think of tonight, certainly get those to Brian, and Brian can work with Jamie and answer those or get additional information as required.
Sure.
Alderperson Jarvis.
Thank you. Thank you for coming to give the presentation on this audit. I do have several questions and some comments, but I will save them for our utility committee meeting or send them via city administrator.
Okay.
Good. Thank you. Thank you for taking the time to come and talk to us. The chair will entertain a motion to accept the audit report as submitted.
So moved, Alder Markham. Second, Alder Williams.
We have a first and a second. Any discussion? Clerk will call the roll.
Anderson?
Yes.
Nelson?
Yes.
Markham?
Yes.
Jarvis?
Yes.
Fernsler?
Yes.
Williams?
Yes.
Hanson?
Yes.
Motion carried. Thank you. Thank you. Appreciate it. Moving on, item 7, presentation and acceptance of the Plymouth Utilities water rate case application. Tonight, we have Howard, our finance manager at the utilities, in the hot seat.
Hot seat.
And my understanding is that you
Water.
prepared a water rate application,
That's correct.
and you're asking us for, to go ahead with that, so why don't you, and I think that the auditor just explained very well that the water utility is rather low and in need of some assistance. When was our last water rate increase?
It was in 2006.
2006, okay.
So,
With that as a prelude, go ahead and tell us
okay.
what you have for us.
Everybody have the, it's about 4-page water rate case report that I believe Brian has passed out to everybody. Basically, as you know, we're asking for the council's approval to go ahead and file the water rate case. We're under a timeline. We have to get it, I believe, in by August 1st. Or is it tomorrow?
Yeah, I think it is August 1st. Otherwise, you have to redo a brand new August.
Yeah, so.
Can
so
you,
we're-
for everyone's benefit, I'm not sure that that there's an understanding of what you mean by test year, so why don't you,
I can
just-
get, yes,
can you just
okay.
comment
We-
on
we
that, what
have-
they mean?
We actually have 2 test years. If we can file this rate case before August 1st, then we use 2013 as the test year. And then all the projections, all the activity up to the end of 2013 will be used in calculating the rate increase. So if it goes past August 1st, then we have to take and use, we have to redo the whole rate case, and we have to project up to the end of 2014. So, and if we do
So,
that,
if-
there are some,
Yeah, restated, basically, to do the rate case, we're either gonna use 2013 budget data or 2014 budget data to calculate the rate of return and the rate case. And right
And-
now, if it's filed before August 1st, you use the 2013 data. If you wait after August 1st, we would use the 2014 data, and there's a significant impact to using 2014, but we'll get
we'll
to
get to
that
that.
later.
Yep.
Okay.
Okay, if we go to the second page, you'll see it's just a very short analysis of the net investment rate base. And basically what that is what our capital investment is, our plant and service. And then they do some basic math as far as depreciation and some other minor items. And then they come up with a number of $12 million. That would be our net investment rate base. And that is a driving factor for our rate increase. So going down to the second half of that page, you'll see a comparative income statement, and this is where we used our projection for 2013. And so we established a budget for 2013 and came up with what we anticipate our expenses and our revenues are going to be. And so we're looking at a rate of return of less than 1%. So we're down about negative. We're about $93,000 shy from coming down to zero. So, of course, doing the calculation, the Public Service Commission has indicated that they would like to go no higher than 5.5% for a rate of return. And so using a very simple calculation, which is the last line, basically it's taking the net investment rate base of 12 million and taking 5.5% of that, and that will give you what they say your income should be. Taking that number and using it as a rate increase, we're looking at a 39% rate increase on the water utility. Now, what does that equate to? That equates to roughly about $9 and some cents more per month. So moving on to the second page, it'll give you a better idea of the big picture of what happened and what caused this increase to move up so fast, so high. Basically, on the first chart, you'll see that our plant being the driving factor of the rate case, in 2007 we had roughly about $9 million worth of plant. And it stayed fairly, increased some, with 9.3, 9.9, 10.2. And then in 2010, we started picking up and doing quite a few projects. And then in 10 and 11 and 12, we went from 10 million to 15 million, almost a 50% increase in just a few short years. And of course, part of that was TIF 4, part of it was TIF 6, and then we did a Willow Road project. So basically TIF 4 was done due to the fact that we were in the middle of a recession and we were able to get some really good bids on the projects that we were doing. And I got an analysis from Kapoor and Associates, and they had indicated on TIF 4 that we had saved about $450,000 on the bids that we had received. And we're going, substantial money. And at the time, we also thought that, you know, it was good business as far as the contractors in the area. And we found that we were getting bids not only from 3 construction companies, but we were getting bids from as many as 6 and 7 construction companies. So people were hurting, they were looking for business. And so we were getting some good prices. So that being the driving factor, you go down to the second part, and you can see the recession was riding in. 7 and 8, normal activity, and then from 9 to 12, it just leveled right out. Nothing happened. Everybody pulled back. They were trying to cut back on all their expenses, so revenue was going no place. And then, of course, like any other business, you know, expenses are going to start catching up to you at some point in time. And we were riding a pretty level field until we hit 11 and then 12. And then on 2012, we ran into the lead analysis problem. And with that, that was the driving factor that drove that expense factor just way down. Maybe Ryan can explain a little bit. It's the process of not only doing reviews and that, but also chemicals were a major factor in the cost.
I believe the cost of our chemicals in the water supply system doubled because of the lead issue, because the additional of the polyphosphate chemicals, which was done after Rupert Milkie did the chemical optimization study last year. So the chemicals doubled. And then again, just to follow up on Howard's comment, you know, if you look at 2009, the plant and service was 10.3 million. By 2012, you know, it's 15.5 million, so that's roughly a 50% increase. The other comment to make is that you recall back in, well, some of you were here in 2007, we issued bonds for a variety of utility projects. 2 of those projects that are outstanding is well number 17, which is under development, as well as the water reservoir project, which we borrowed money for and is an ongoing project. So if you look at that and add 2.4 million of additional plant onto that 15.5, basically you're looking at the plant being $18 million. And so those projects are anticipated to come online in the year 2014. And so if we file a rate case later than this point, the plant that the PSC is going to look at is going to be more like an $18 million figure rather than this $15.5 million figure. And you're still going to have the 5.5% rate of return that's authorized. Currently it's 6.75%, but as Howard mentioned, that they're decreasing the rate of return to about 5.5%. So it's still going to be 5.5% then on 18 million versus the 15.5. And so what you're going to see is a water rate increase dramatically more than 39%. I don't think we calculated it out, but let's say 70% in one water rate case. Whereas if you do the 39% now and then come back and file a rate case down the road, you spread that increase over a greater period of time. So that's the key issue to realize on plant growth.
And the idea, of course, was trying to mellow out the rate a little bit better than just banging it all in one big number. So rate cases are, you know, done all the time. So it's just a matter of trying to flatten out the increase as much as possible. Yes, we waited actually waited for almost 7 years to do a rate case. Normally, when you look at this chart and you take a look at the utility plant and you look at the first 3 years, 7, 8, and 9, that's kind of the normal business that we've usually had. And when we do a rate case, we could do a rate case in 5 years easily, and we'd have about a 25 or a 28% increase. But that kind of increase usually equated to roughly maybe $3.50, $4 a month. So It wasn't material, and so we could blend it out. But it just, circumstances came to be, businesses started doing different things, and when that happened, we had to follow whatever business was calling for. So it called for those increases, and we did the job. But then what it does is it raises your rates. So it's one of those things. If you go to the next page, you'll see that we were just doing some comparisons as far as what water rates were in the area and outlying area. And of course, there were some that were higher, and there are some that are lower. Is there a good price? I don't know. It's just what business calls for, I guess. So we're at, our proposal puts us at, it takes us from $23.87 up to $33.18. So roughly about $9.25. No, $9.35. No, 25. That's where we're at. So that's what it is, and so we're looking to the council for approval.
The following page, also just on the back, lists the water rate increases from October 1st, 2011 to January 31st, 2012. I believe this is a complete summary of those communities that submitted water rate cases during that period. And so those are the percentages, just to see how other percentages come at other utilities during that time frame for water rate cases.
Good, thank you, Howard, we appreciate the report and the breakdown of information. I would assume that yourself representing staff from a financial standpoint, is your recommendation that we approve the water rate case application as you prepared it?
Yes.
Thank you. Chair will entertain a motion so we can discuss.
Mr. Mayor, I make a motion to approve the rate case as presented.
Second.
We have a first and a second to approve the Plymouth Utility water rate case application that Howard prepared as indicated. Discussion, questions? Alderperson Garvis.
I have several questions, then I have some comments and thoughts about this rate increase proposal. The projects that have contributed to the need for an increase are
Yes.
TID number 4, TID number 6, and Willow Road. Can you talk about some of those projects in more detail?
Well, the Willow Road project would have been the extension of the water main north of PP to service Glacier Transit. And
Okay.
that would be that project. TIF number 6 is the single parcel TIF related to the Sargento corporate headquarters, and then the extension of the water main. And TIF 4, I'd have to go back and look. I'm not sure which projects those
Yeah,
were
there's
right
just
off.
several small projects that just added up to about 1.3 million.
And then the other thing that would be, you said correctly that the utility building for the water portion
There's
is
a
part of this, right?
small portion of it, about 800,000.
Okay.
And what, do you recall what percentage that is of the overall cost? 20% or something like that?
No, I didn't do the
Yeah,
cost.
okay. So it is a percentage what happens is that building was split over the 3 utilities, the assets of that. And that, 15%? Okay, 15%.
Yeah.
So that would be in this number, and then again, for the $18 million, that would probably come on board in 2014, is 1.2 related to the well number 17, 1.2 related to the reservoir project. The reservoir project, we haven't added a reservoir in about 100 years. The well, we haven't had a well since the 1980s, so those would be two unusual projects that we don't normally have. And then the other, couple other things that'll play into the future for capital additions is the Highway 67 project, and the DOT project on that. There's going to be water main work on that in the future. That's potentially a 2015 project. And then also to replace 91 lead services and addressing some water main related to the lead consent order by December 31st, 2015. So those are capital projects that will impact the utility that are not included with that 0.4 million I add on to the 18 million. So the water utility has taken on significant amount of capital projects for for the last several years, and then going forward, at least for the next 2 years, there'll be significant capital projects.
Yeah. And then you had said that the average increase per month would be $9, and that's a 39%
Correct.
increase. Okay. I know that the council voted on several of these economic opportunities to help businesses, TID 6, and as well as the Willow Road project. We've all approved these projects, and back then we knew that there would be some increases to the water rates, and it's one of the reasons why I chose in some cases not to vote for those projects, because I knew that there was going to be a substantial increase in demands being placed upon the water utility. 39% to $9 a month is quite a significant increase. We're up towards the high end of the range if you look at it being $34. We're on the higher end now. And I understand that we haven't raised the rates in 6 years, but one of the things that happened when we built the utilities building is that there was a grant opportunity that came up just about a few weeks after. It wasn't a grant opportunity, it was a 0% loan opportunity that could have changed how we financed the new operations center significantly. And I was hoping that that if we had learned of that sooner, then we could have reduced the amount that we took out of the reserves. And in that case, we could use those reserves towards situations like this, where there's a proposed rate increase, and help to flatten that impact on our customers and our ratepayers. So one of my questions in trying to address that this is a significant increase is, if we approve this rate increase package tonight, does that preclude us from coming to the council with taking some money out of the reserves to help flatten out the increase on the rates? I mean, can we get approved from the PSC, get that approval, but could we, in essence, take some money out of the reserves to try to change that from 39% down to, 25% next year?
Well, I'm thinking that when the PSC takes a look at the increase in plant, that the first question they're going to have is what caused it. Because in the past, what they've done is they've looked at situations and made a determination that if it was more industry related than it was just residential, commercial related, then they would shift the load over to industry. In 2006, when they did the rate analysis, they changed my 28.5% increase to 24% for the residential and 30% for the industrial. So they will review that.
Okay.
I can't tell you
Right.
what they're going to do, but I know they will.
That's good information, thank you, but can we still come back after an approval and infuse some cash from the reserves to lessen the impact on our ratepayers? That's
I'm
what.
sure it can be discussed with the Public Service Commission. What'll happen at this point is, all we're doing right now is just getting the filing in. For the next 2 to 3 months, we'll be going back and forth with the Public Service Commission on multiple questions that they're going to have. And if that's an issue that we can throw in there and make some changes, we surely can bring it up. We're not locked into this number at this point in time. It's just a beginning.
Yeah, because I would have liked to have seen this at the utility committee meeting that we had, so that we could have maybe discussed some of these kind of issues beforehand. Now I see that you're under a deadline of August 1st, so, okay. All right, thank you.
Okay.
Any other questions, comments? Clerk, call the roll.
Williams.
Yes.
Nelson.
Yes.
Bernzler.
Yes.
Anderson.
Yes.
Hanson.
Yes.
Jarvis.
Yes.
Markham.
Yes.
Motion carried. Thank you. Thank you, Howard,
Thank
for preparing the application, and tomorrow's the 31st, so get it in.
Get it in.
Thank you. Moving on, item 8, resolutions, number 11, a compliance maintenance resolution to Wisconsin Department of Natural Resources. Bill, did you want to give us a summary of that? And then we'll entertain a motion.
Sure. This is something that we do every year at utilities, and I sent you a memo. Our score is a 4.0, which is an A, which means there's no required improvements that need to be incurred. And if you look at the back of the second page, it kind of lists the things that the questionnaire kind of goes through. And it's the influent and effluent of the treatment plant, how we handle our sludge, our preventive maintenance and staffing, the operator's certifications, and the financial management, and then the collection system itself. And everyone over at the utilities is doing a good job of keeping things maintained and operating properly, and I recommend you approve the resolution so that we get this thing filed.
Thank you. The Chair will entertain a motion to approve resolution number 11 as stated.
So moved, Alder Anderson. Second, Alder Nelson.
We have a first and a second. Any discussion? Alderperson Jarvis.
I just want to thank the staff for achieving these, the 4.0, Mike Pankowitz and his staff. Thank you.
Any other comments? All in favor, say aye.
Aye.
Opposed? Motion carried. Thank you. Item 9 is the consent agenda. Chair will entertain a motion to approve the consent agenda.
So moved, Alder Markham.
Second, Alder Hanson.
We have a first and a second to approve the consent agenda. Any discussion? Clerk will call the roll.
Markham.
Yes.
Jarvis.
Yes.
Hanson.
Yes.
Anderson.
Yes.
Bernzler. Nelson.
Yes.
Williams.
Yes.
Motion carried. Thank you. Item 10 is not needed. Item 11, Public Works and Utility Committee recommendations from the meeting of July 23rd, 2013. We have 3 items, A, B, and C. Item A, discussion and approval of fiber network equipment project Phase 1 in the amount of $44,000 from CNL Concepts LLC. Administrator Yergis, you want to give us a brief summary on that?
Yeah, in the packet, you do have the memo and the cost estimate, and the committee recommended $44,000. Please note that after the meeting, or during the meeting, I noted that the Highland Lift Station was not included in that cost estimate, and I asked for an updated cost estimate on that, and all of you should have received that tonight. And that dollar amount changes technically to $45,003.
So we should have a total then of $45,003 as the approved numerical value?
Correct.
Thank you. The Chair will entertain a motion to approve $45,003 for the fiber network equipment project Phase 1.
approve the fiber network equipment purchase for $45,003.
Second, Alderman Markham.
We have a first and a second. Any discussion? Clerk will call the roll.
Williams,
Yes.
Nelson,
Yes.
Fernsler,
Yes.
Anderson, Hanson,
Yes.
Jarvis.
Yes.
Markham.
Yes.
Motion carried, thank you. Item B, discussion and approval of the 2013 capital improvement plan for the Department of Public Works. Administrator Yurgis, you want to give us a brief summary on that, and then we'll entertain a motion?
Yeah, two things. One, you have a cover memo. Number two, the cover memo kind of outlines the seven changes for the CIP plan. The other thing is you actually have the document, and right to the right of useful life is 2013 amended, and then the other column is 2013 adopted and 2013 requested, and then the requested column. Requested is obviously what was asked during the budget process. Adopted was the final budget, and then amended is what is on the agenda tonight to amend. For the most part, we're deleting several street projects, which we're not looking at having those done this year due to potential utility issues underground related to those projects. And then there's a few adjustments, small adjustments where, for example, the Crummery Street Overlay Project is estimated to be $55,000 rather than $51,000. The roofing project is estimated to be $8,000 rather than $15,000, and so there's a few adjustments like that. I would prefer that that this be adopted so that the Common Council is aware as to what projects are actually being done in the calendar year 2013 versus what was actually budgeted, and that you recognize those amendments by passing a motion to that effect.
Thank you. Chairperson Jarvis, did you want to make a motion?
Yes, I move to approve
2013 capital improvement plan as presented?
I was going to move to approve items B and C, capital improvement plan for the Public Works Department as well as Plymouth Utilities.
Let's back up a minute, and if you want
Can we do
to,
one? Okay.
we're doing B only, but
I move to approve the 2013 capital improvement plan for Department of Public Works
okay, thank you.
as amended.
Do we have a second?
Second, Alderman Markham.
We have a first and a second. Any discussion on the 2013 capital improvement plan for the Department of Public Works? Clerk will call the roll.
Markham,
Yes.
Jarvis,
Yes.
Hanson,
Yes.
Anderson,
Yes.
Fernsler,
Yes.
Nelson,
Yes.
Williams.
Yes.
Motion carried, thank you. Now on to item C, discussion and approval of the 2013 capital improvement plan for the Plymouth Utilities. Again, Administrator Yurgis, you want to give us a summary on that?
Yeah, it's the same kind of format for the amendment. I'll just go down them quick. The first item, the electric line rebuilding capital figure, basically 1.2 million to 1.6 million. Really what that represents is previous year's projects that were underway in previous years, but actually are going to get energized or made active this year. And so it just references that the actual dollar value of the line rebuilding program is closer to that $1.6 million. And that's just basically carry over previous year's projects that are being completed this year. Number two is the digester project that is related to painting the digester cover and adding the linear mixer on it. Project number three is eliminating $750,000 from the CIP because we're not doing any water main or lead replacement program this year. We still have to do a lead replacement program and have 91 services replaced by the end of 2015. So the sources of funds we borrowed for, we'll be using that in future years. Then the reference to the fiber network equipment, that should really be $45,000 now. The EMI project, just to note that, really we are eliminating that for the considerable future. That's a project that is a longer-term project, which there needs to be a lot of more planning related to that project, and so that's not anything we're gonna be doing in 2013 or over the next couple of years, and that would be up for discussion at the committee and council level in the future. And then item number 6, just to recognize that the line truck came under budget. A trailer purchase was planned, but we don't need to do that after taking a look at the existing trailer. And then number 8 refers to adding $30,000 to the SCADA upgrade, which is a software upgrade, which is ongoing, but that project was not previously recognized in the capital improvement plan, and the committee preferred to recognize that in the capital plan. So that is those things are added, and I would defer to the chairperson Jarvis if she has any other comments.
I move to approve the 2013 Utilities Capital Improvement Plan Amendment, also adding that item number 4 should be $45,003 instead of $44,000.
Thank you. Do we have a second?
Second, Alder Anderson.
We have a first and a second to approve the 2013 capital improvement plan for the Plymouth Utilities as amended. Any discussion? Bill?
I'm not, who did you talk about that trailer?
Jim Peterson.
Okay, 'cause when I was talking to Dan, if we bought the new trenching equipment, we need a new trailer.
The Pro Span. Pneumatic.
Yeah,
Okay.
that's what I thought it was for.
Okay.
But I'm not, first time I've seen it, so I'm not sure. So if
Okay.
you wanna leave it in, we can take it out at the end of the year. But I thought, Dan told me we need it, and he talked to Jim. We're talking up here, we're buying an $18,000 pneumatic, trenching system, which holds the walls back when you're digging.
Is
And I
that
thought we
item
needed
number
a new
7?
trailer to haul that with.
I think so.
Is that number 7 on the
We
list?
can leave it in
Okay.
and just double check with Dan.
Yeah, on page 2, the second one down, 18,000 is for the shoring equipment, and then.
So the new
I
equipment,
thought the trailer was for that.
yeah, but the new equipment won't fit on the old trailer?
Correct.
Okay.
Okay. So I
So
will
we wanna add
slightly,
Ken back, yeah.
yeah, so I'll,
We can leave it in.
yeah, I will modify my motion to take out
Item 7.
number 7.
First modifies the motion. Does second agree to the modification? Clerk Huberty, do you have that recorded
I do.
correctly? Thank you.
Yes.
Any other questions or discussions? Thank you, Bill. Clerk will call the roll.
Jarvis.
Yes.
Bernsley. Markham.
Yes.
Hanson.
Yes.
Nelson.
Yes.
Anderson.
Yes.
Williams.
Yes.
Motion carried. Thank you. And we can make note of that, Bill, toward the end of the year, and if we have to make any adjustments on that, just in case. Thank you. Item 12, new business, discussion and action regarding claim against the city, auto physical damage subrogation demand from Auto Club Group Insurance Company in the amount of $4,904.84 in regards to their insured Greg Grimes. Clerk Huber, do you want to give us a brief summary on that, please?
Yeah, I was served with this claim from the Greg Grimes Automobile Insurance Company. It's a subrogation claim. It's for the damage to the vehicle. The previous claim that the council considered and denied was a overall claim for injuries sustained, to Greg Grimes himself. And this is the subrogation rights that the Automobile Insurance Company does have to, right to do, so. And our recommendation from CIVMIC, and I believe I've talked with Attorney Feber, that we deny this claim like we did the previous one. I can have the recommendation here from Tom Mann of CIVMIC. As I did indicate to you, I'd recommend that you formally deny this claim as it is a separate claim from the claimant. The issuer for Mr. Grimes has a separate claim from Mr. Grimes, so this claim must be formally denied to start the 6-month statute of limitations. The 2013 email earlier this year to you with the reasons for denying Mr. Grimes' claim. The same reasons to deny the injury claim also apply to the insurance company's property damage claim.
Thank you. The chair will entertain a motion on the claim in the amount of $4,904.84.
Second, Alderman Markham.
We have a first and a second to deny the claim in the amount of $4,904.84. Any discussion? Clerk will call the roll.
Markham,
Yes.
Williams,
Yes.
Nelson,
Yes.
Fernsler, Anderson, Hanson,
Yes.
Jarvis.
Yes.
Motion carried, thank you. Next item is our motion to go into closed session pursuant to Wisconsin statute 19.85 per N1 per NG. Chair will entertain a motion.
So move, Alderman Nelson.
Second, Alder Hanson.
We have a first and a second. Any,
Nelson,
Yes.
Anderson,
Yes.
Jarvis.
Yes.
Markham,
Yes.
Fernsler, Hanson,
Yes.
Williams.
Yes.
motion carried, thank you. For the record, we're now in open session. Item 15, discussion and possible action regarding 502 Reed Street public nuisance claim. The chair will entertain a motion.
Mr. Mayor, I make a motion to authorize the city attorney to initiate a court action to abate the public nuisance at 502 Reed Street.
Second, Alder Hanson.
We have a first and a second. Any discussion? Clerk will call the roll.
Hanson,
Yes.
Jarvis. Markham,
Yes.
Williams,
Yes.
Nelson,
Yes.
Fernsler,
Yes.
Anderson.
Motion carried, thank you. Item 16, discussion and possible action regarding claim for excessive assessment from Agree Limited Partnership / RCG Ventures. Chair will entertain a motion.
So moved, Laura Anderson, to dismiss.
Have the city attorney work with the city administrator and assessor to file court action
To dismiss.
to dismiss.
Is that what you said, John?
Second, Alder Hanson.
Can't remember all
And do we have a second on that?
Second, Alder Hanson.
Hanson.
All, thank you. Any discussion? Clerk will call the roll.
Anderson,
Yes.
Nelson,
Yes.
Markham,
Yes.
Jarvis. Fernsler,
Yes.
Williams,
Yes.
Hanson.
Yes.
Motion carried, thank you. Motion to adjourn?
So, second.
We have a first and a